Welcome to the show, and I'd like you to meet Ron Baker. Ron, welcome to our show.
Thanks, Louis. Thanks for having me back.
Oh, it's great. I got to tell you, when we have you on our show, we get you. You're the highest viewed person on our show, and it makes sense because everything that you say is solid gold. I've known you for many years, and you've frontiered value based pricing. I love that part. You also did Firm of the Future. You did my favorite, the book that you just did, subscription modeling, which and it's called Time's Up, which was really nice. I love that title. And what I want to talk to you about is something that's coming aboard quite a bit now. It's it's people that I guess because the next generation is coming into the accounting profession, and they're all looking at how to scale their practices, you know. And what do you think about that? Where are they going on the scaling? Do they have it right, or is there nuances in scaling that people should really think about?
Yeah, I think there's nuances. Well, I think there's nuances to everything in business because business
Sure.
isn't science, right? It really rests on what your strategy and your end goals are. So if you want a lifestyle firm, don't worry about scaling. You know, uh, y- who wants a $10 million firm? If you don't want that, then don't bother. There's nothing wrong with being small. I mean,
Right.
it doesn't preclude excellence. You can become better every day and stay small. There are many firms out there that have limited their size, but I would label them excellent firms, even
Yes.
though they're not growing by leaps and bounds. They're not scaling. Now, if you want to scale, you have to look at your strategy and you have to look at your business model. If you're in an hourly billing business model, that's not very scalable because your revenue grows at the same proportion as your labor expenses. The only way to, make $1 million more is to bill 1 million more hours, which takes labor. So your revenue's growing, sure, but so is your labor cost. Whereas if you look at an outfit like Apple that can produce millions and millions of iPhones, um, they can scale very easily because, at the margin, it doesn't cost that much more to produce one more iPhone.
Right.
But here's the thing, Louis. What's fascinating is there's a movement out there among consultants and other firm thought leaders, whatever you want to call them, that we need to productize our services. And boy, do I vehemently agree with that, disagree with this because
Can you before you go any further, because I want people to know what you define as productize the service, so that where everybody's on the same page. Could you define what you mean by productize the service or the
yeah, and I
value?
and, and I don't have the technical definition in front of me, but basically, it's when you take a common problem, you have a solution for it inside of your firm, some number of services that you might provide to get them to a certain outcome, and you
Right.
productize it. Maybe you name it, right? The poison pill is a famous productized service, by a law firm that when a company is being hostily taken over, they
Right.
swallow a poison pill and they ward off the intruder who's trying to buy them. That very famous productized service. The problem I see with this is professionals, we're not we're not uh, we're not menus. I think if you productize your service, you're flattening yourself into a menu or a series of SKUs, and we're so much more than that as professionals. Ultimately, we need to guide transformations because that's where I think the economy is headed. And I think products and services, and we run those terms together, by the way, products and services, we say it really fast because they're
Right.
both increasingly commoditized. It's like the law of gravity. They're going to get more and more commoditized. That's why you started to see companies move into the experience economy and offer terrific experiences, whether it was travel or going to Disney World or a Taylor Swift concert. These things command higher pricing power and higher pricing. Now, experiences are great, but the ultimate, even above experiences, are transformations. When you guide a transformation from where the customer is to where they want to be, some desired future state, some better version of themselves. This could be as individuals or it could be in their business as well. If we're providing transformations, then the products and the services that we provide in order to effectuate that transformation, and the experiences that we stage to help effectuate that transformation, they're all inclusive. We're charging for the transformation, not the products and services. The services are just a means to an end. This
Right.
is this is why I think when we go from services to productized services, we're commoditizing ourselves. Starbucks did this with itself. It
Right.
actually turned a great experience, so the so-called third place. I know we're supposed to talk about Tim Hortons because you're in Canada, but let's just take
We have
Starbucks.
Starbucks here anyway, so
Okay,
it's
true,
fine.
but you guys don't like it as much, I think, as Tim Horton. But
Well, actually, to be quite honest, Tim Hortons is better, just
it,
personally.
I would probably agree with that. But so Starbucks takes itself. It used to be a premier experience. It got incredible pricing power for
Yep.
its coffee, and they've commoditized themselves by turning it into a productized service. Basically, how they do that: mobile apps, order and then rush into Starbucks and rush out with your coffee, and all the time they're
Yeah.
losing that third place, the place to go with comfy couches and chairs where you could sit and work or read a book or talk with friends. That's all gone. They're no different than a Dunkin' Donuts or a McDonald's drive-through, and they commoditize
Actually,
themselves.
there's more room in Tim Hortons now,
That
where
wouldn't
you have
surprise me.
where you can actually sit and do stuff. But you're absolutely right. I've the Starbucks near us has gotten rid of all their chairs and stuff. You can't sit anywhere.
Yeah, it's
Yeah,
crazy.
it's no longer the social aspect of Starbucks is gone. Yeah, just like Chapters, to be quite honest, when they used to have the couches
Mm.
and everything.
The
Now
books,
I'm
yeah, the
dating myself.
bookstore.
That was a long
Yeah.
time ago.
Yeah,
You know.
Borders. That was Borders, right? That was Canadians' Borders that we
Yeah,
had
yeah.
down
So
here. Yeah.
yeah, so and then when they got rid of that, it's slowly, but I get it. I mean, markets change, and when they focus on what we call quarter profits rather than long term sustainability and
Well,
growth,
that
it makes
seduction of
sense.
growth for the sake of growth. I don't
Yeah.
think the market so much changed as Starbucks lost its way. It strayed from its original strategy, which was completely sound. So my beef with productizing services is it flattens us into like a digital menu,
Right.
like we're selling SKUs, and we're not. We're professionals. We should be guiding transformations. Products and services basically say, look at what we can do, whereas transformations say, look at who you can become.
Right.
Which one's more valuable?
Well, uh, it depends who you talk to, because some professionals say is what we can do is very valuable, right? But what you're saying is which is more valuable to the customer,
Right.
right? So if you're talking about the customer, then I would agree with you. What's more valuable is what it means to them, you know, how it impacts their lives, right? So it's not what we do, it's how it impacts them. So I agree
That's
with
right.
you 100%. And the impact is literally the transformation, whether it would be mindset, whether it would be a physical change in their business, whether it would be work-life balance. I I can't agree with you more. I guess the factor about scaling is when an accounting firm or a professional accountant talks about scaling, the end result is they want to make more money,
Yep.
right? They want a higher profit on the bottom,
Yep.
right? So they believe that scaling means getting bigger to accent the bottom line. So let's flip this. Instead of saying how can we scale, how can a um, professional accountant who's got a practice or a two partner practice, which is probably the bulk of the small businesses out there. How can they scale the profit line rather than the top line? How can they do this without developing, like you said, they went from 1 million to 5 million, but the marginal increase in their pay or in their profits is much harder to manage. So why don't we focus from that perspective, Ron? And I'm pretty sure you've got pretty good ideas of how to scale profitability rather than scaling top line. What would you suggest would be the key things there?
Well, as we both know, Louis, the easiest way to scale, if you want to grow revenue at a faster rate than your costs, including
Yeah,
labor, the biggest, then the easiest way to do it is with pricing power.
right,
And if you have pricing power, in order to get pricing power, you have to have an uncommon offering. You've got to go out into the marketplace and talk about things nobody else is talking about. Everybody's talking about, look at my productized service. Look at this productized service. Buy it off the shelf and it will solve this problem for you. Whereas if a firm goes out and says, no, we guide transformations. You're the hero of this journey, Mr. Customer. We're just your guide. If you're serious about moving from where you are to some desired future state, then we can guide that transformation. That's an uncommon offering. Wrap that around a subscription model that says, hey, we can do serial transformations from womb to tomb. When you have a child that's born, we can start planning to get them into college. We can grow your business. We can make it more valuable. So when you go to sell it to enjoy your retirement years, you'll have more money. We can help you build a dream home. We can help you build your first home. We can help you plan your legacy for after you're gone, for posterity, for philanthropy, whatever it is. We can help you do estate planning for peace of mind for your heirs. These are all transformations. They have nothing to do with services. But yes, you need services to facilitate guiding those transformations and making them happen. But that's not
right,
where the value is. The value is
right.
in that transformation. And that's, I think, the highest calling of a professional. I think we're losing our soul when we talk about productizing services, when we talk about private equity coming into the profession, how many multiples of EBITDA are we going to get, and all of this stuff. A professional can't be priced. A professional is pledged. A professional professes something. A profession professes something. It stands for something. And what we should stand for is, I believe, the raison d'etre of business, which is human flourishing. Help our customers become healthier, wealthier, and wiser, and live with purpose and meaning. Those are the ultimate outcomes. If your business isn't helping people flourish, it's a racket. We might as well start a meth lab. A meth lab can be profitable and it scales really well. But
Okay, well. In this realm, we're going to stay on the legal side of the law. Just to
okay,
let you know,
well,
Ron.
I'm just giving you an example.
Yeah, yeah. You gave me a good example, but we don't. That's not our audience, to be quite honest
Oh,
with
they like Breaking Bad, though. Come on.
you. So, but I get it. I get it. I what I heard from what you were saying, and it goes back to your original thing. So, because I do a lot of training and I do a lot of one to one with accounting firms, and I also when I meet customers that have gone from one firm to the other, I got to be honest with you, it's not the services that they usually complain about, right? Most accountants, most professional accountants and bookkeepers are pretty good at the service part. What they lack is the experience for the customer, right? And what I would say scalability in my book is improve the experience component and the price sensitivity just washes away. Do
Agreed.
you agree with that? Right?
Yes. And
Because you basically said that if you look at all of the, I'll give you a car example, Lexus, for example. You know, everybody that everybody that I know that owns a Lexus, almost all of them go back and buy another one. Not because the Lexus is a good car, which it is. It's how they're treated
mhm,
at with with the car. They deliver stuff. I mean, my friend had a problem with his Lexus. They gave him a rental for 6 months, and they forgot about it. Then he got a car for, he never forgets that. He tells that story all the time, right? And guess what? He bought another brand new Lexus. I mean, he doesn't buy one every month, but the point is the the ability to give your customers the experience. So I keep referencing experience over scalability. And I think experience levels profitability through the roof. So, do you agree with me on that? If we look at one of the reasons I can't get a hold of my accountant, he doesn't return my calls, my stuff is always late, you know, he charges me for every 5 minutes, or it's always my fault that I stuff doesn't get done, right? You know, the list goes on and on. Uh, what do you think, Ron? Do you think if our professions focus on experience would be a good idea?
Absolutely. Because again, that's part of an uncommon offering that is going to make you more value and give you more pricing power. And when we talk about pricing power, I am literally saying 2 to 3 to 4 to 5 times more than you're charging now. I think
Right.
people are willing to do that. And let me give you another framework to think about this that I think your folks will find really, really useful. When we talk about time in this profession, we always talk about it as, value or the price because that's how we
Sure.
compute those things. But it's actually not about our time. It's actually about the customer's time. And to the extent that we're going to measure time in this profession, we should be measuring the customer's time. Now, what do I mean by that? Well, first off, how much time do we save them? Saving a customer time is massive. People will pay an enormous premium for that. And we know that because we see people signing up for concierge doctors or direct primary care doctors where they can get in right away. There's no uh, waiting rooms in these doctors' offices. They just take you right in because they run at such a lower capacity level. Um, and people pay a big premium for that level of service. The last thing you want to hear from your dentist with a bad toothache is, "Oh, I can see you in 3 weeks."
Right.
No, you better be able to take me in now, right?
Yeah.
Which means you've got to run at lower levels of capacity. In other words, fewer customers to make a deeper impact. And that deeper impact is going to more than compensate in pricing power than scaling a productized service, say. So save them time. In other words, for the tax firms out there, stop sending them 400-page organizers. Nobody appreciates this. This is customer abuse. If they could fill that thing out, they wouldn't need a professional. And anyway, you should know everything in that organizer anyway, because you should be having regular touch points with your customers throughout the year. And that goes back to your point about you're an advisor all the time, basically,
Right.
not just doing the once a year tax return. So save your customers time. And by the way, don't waste their time, because if you waste their time, that's negative value and you're likely to lose them. I will leave businesses that make a stellar product or maybe a great service, but if they waste my time, I'm gone. You're going to keep me on the phone for 2 hours, or your digital interface is not pleasant like Amazon's, which is what I'm comparing everybody to these days. One-click shopping, it shows up today or tomorrow. Then I'm gone. I'm gone. You waste my time, I'm gone. Biggest sin today in business is wasting the customer's time. So that's the first thing. But then beyond that, there's time well spent. Make sure that every interaction with the customer, like on a Zoom meeting or face to face or even on the phone, um, is they walk away and they say that was time well spent. They asked me great questions. They gave me ideas to run my business better. Whatever it might be, make sure that they walk away from each one of those moments of truth when you're face to face with the customer having some type of interaction,
Yes.
that they walk away and they think that was time well spent. And the last level, and this is the highest there is time well invested. And what I mean by that is they're investing with you as their guide in a transformation, which means, by the way, that they're going to be investing their own time without you present in
Right.
that same transformation because they want to make it happen. They want to reach that desired future state. So I'll give you a real quick story. One of my mentors is Joe Pine, who wrote The Experience Economy and is coming out with a book called The Transformation Economy in February. And
Great.
he's a good golfer. He was like a 15 handicap, which is pretty good. but he wanted to be single digit. And he's watching this golf pro give a lesson. And the guy finishes up and he walks over to the pro and he says, I want to be a single digit golfer. And the golf pro looks at him and says, well, my lessons are $150, half hour, blah. He says, no, you don't understand. I want to be a single digit golfer. If you get me there, I'll give you $10,000. And if you get me there in a week, I'll probably give you a bonus. Right? In other words, the time is reversed, right? When
Yeah.
we look at it, if the pro can get him there in a week, it would probably give him 15 grand. Now,
Yeah.
put aside, Louis, how we're charging for that. I'm not advocating charging like that for an outcome. That's not the point of the story. The point of the story is now that the pro and the customer are both focused on a specific outcome, some desired future state, some transformation, then now they're working towards the same goal. The pro's going to hold Joe accountable. He's probably going to be pounding on his door at 8 in the morning. Come on, we're going to go play 18 holes because I want to see how you handle course management in real time. When you get in trouble, land in
Sure.
the
Sure.
trap, all of that kind of
Yeah.
stuff.
Yeah.
And it just changes the nature of the relationship. But the other thing that's going to happen is when that pro's not around, Joe's going to still be out there playing, hitting buckets of balls, trying to
Yeah.
encapsulate everything that the pro told him. That's time well invested. Now, if you can save the customer time, if you can make the customer feel like the time they spend with you is well spent, just like when we go to Disneyland, we walk away and say that was time well spent with the family. We created memories for
Sure.
a lifetime, pictures, blah, blah, blah. Time well invested. You do those three things, you'll have customers for life. And you'll be able to charge them 3, 4, 5 times more than you're charging now. But you
Right.
can't do that if you're focused on just providing services.
S- So, Ron, I really like that idea. And I love the theory about it. Here's my dilemma because I've been here many times is when accountants, and I hate to say it, but most accountants and bookkeepers are very, very reluctant to take on transformation risk. So, what I call transformation risk is I give you the service, I do my job, and we don't hit the target. And now they're not going to pay me or give me money because we didn't get the transformation, right? So that's that. I hear that a lot when we talk about transformations or focusing on the end goal. They love the idea of helping the customer get to the end goal. They're they're very wary about what happens if we don't hit the end goal. I'm out, right? And I hate to say this, most this is where I get a lot of friction. I'm not sure if this is where you get friction, but that's where I get a lot of friction on is how do we bridge that gap? You'll never hear an accountant say, "No, I want to help my customers be transformed, but I don't want to take the risk burden of not achieving it." So, how do you deal with those, um, you know, counter arguments? How do you deal with that? Because that's going to happen.
Yep, I get the same pushback, Louis. And here's the thing. I understand completely that professionals can't charge for outcomes. We can't run around and say, hey, if you get audited, we'll make sure there's a zero tax change audit, right? A lawyer can't run around and say, hey, we're going to win every lawsuit that comes to
Right.
us. A doctor, an oncologist can't say, hey, if you've got cancer, we're going to cure it and restore you to health. There's just no way professionals can do that. All sorts of ethical dilemmas, issues
Yeah.
around that. However, that said, we are getting more savvy as marketers by touting the benefits of our work, not just the features, right? Come to us, you'll have clean books, you'll be able to sleep at night, you're getting the best updated real-time financial information to make the best decisions. These are all transformations, by the way. We just don't use this language. We
I
all
see.
provide transformations. Again, to go back to my list earlier, we help you retire sooner, we help you sell your business at a higher price, we help your cash flow improve, we help plan your legacy for when you're gone. All of these things that we do, we couch them in the language of services rather than transformations, rather than putting the customer as the hero in the journey. and saying, hey, we can get you that peace of mind that you want. We've got to get back to focusing on the outcome. I think I've told you before, Louis, my landscaper story,
Yes.
where you have, hey, I can bring I'll do basic maintenance for your yard, Ron, the mowing, the edging, blah, blah, blah. Or I'll bring your yard up to neighborhood standards so you don't get any more HOA notices. Or I'll give you best curbside appeal. Now, every
Yeah.
landscaper out there is very capable of coming in and upgrading your landscaping and giving you the best neighborhood appeal, but they do it on their time, and they're very capable of doing it. So there's no competence issue. There's no, well, what happens if I don't affect? There are things that you can effectuate, and not
Yeah.
we're not guaranteeing it. We kind of are, because if you're using the subscription model, they can cancel at any time. There's the guarantee. If they're not happy, with the experience, if you're wasting their time, they're done. Cancel. But if you're a competent professional, there are certain
Yeah.
transformations that you
So
can
so
effectuate. We do
I
it every
do like
day.
I so here's the answer that I got from you is change take your services, right, that you do every day and add one extra line, which is the impact on the transformation. These five services tie into peace of mind. This service ties into profitability. This service ties into making sure that you don't have to worry about missing a paycheck next week or whatever, right?
Yep, less
So,
risk, more time with your family,
yeah.
around the
So
areas of healthier,
that,
wealthier, wiser.
yeah. So I that makes more sense. So basically, we're not guaranteeing it. There's no guarantee of
No,
it. It's just saying these services will help you get to here, whether you use them or not. Now let's talk about the fact that we do these things almost innately. Like one of the biggest things that I have in a public firm, and you hit it right on the head. A professional accountant or bookkeeper, it's their experience that you're really going for. It's their knowledge. It's the history. It's what they know,
it's their
which
wisdom.
is the yeah. Thank you. The wisdom that they have, right? And you can't silo your wisdom. You can't say I'm only going to go up to here, then that a little bit that I already have. You give them all of your wisdom when you're connecting, right?
When they need it.
So
This is the
when
problem with the productized service, because you're only giving a piece of the wisdom, but the
no,
professional's
Ron, I
more than that.
disagree. I disagree. You give them all of the wisdom, but you only get paid for a piece of the wisdom.
Well, maybe, yeah, yeah, maybe,
Right?
maybe. Yeah, yeah, I see what you're
Because I
saying.
see
Yeah.
that all the
Yeah,
time. I
yeah,
see when I dig deep into the services, what the professionals do, they only charge for this much or
right, right.
this much, but they're giving them everything, and they go, "How do I get the rest?" Well, it's too late. You kind of gave it away, right? But they can't stop it because of the wisdom is kind of incorporated. So let's go to subscription modeling because that's the golden ticket, right? That's the ticket that allows you to do your wisdom and still get priced. So let's
Yep,
talk a little bit about the model that allows us to go into transformations, that allows us to do wisdom, and it allows us not to have a huge scope creep issue, right?
yeah. This is
Let's
the
talk a little bit
wonderful
about that.
Yeah, this is the wonderful thing about subscription. Subscription isn't just that your customers are paying you monthly. That's not it's a whole different business model than, say, value pricing or even
Right.
hourly billing. So the first thing is with
Or
subscription,
fixed fees, by the way.
or
People kind of,
yep,
yeah,
yep, or fixed fees. Um, Subscription is really about providing recurring revenue, and also constantly plussing the offering, taking your offering and adding things to it that the customer finds valuable. Notice I'm saying offering, not services. I'm trying to move away completely from the terms products and services, because they have been subsumed into the transformation. Much like when bakers bake you a birthday cake, a sheet cake.
yeah,
Notice that the product has been subsumed. The eggs, the flour, all the
Yeah, yeah,
necessary,
yeah.
it's been
Yeah, they don't.
subsumed. And they
Yeah,
and when they hand you the invoice to pay for the sheet cake, they don't break it down and show you all the they say no for one, sheet cake
yeah.
engraved with
Fair
Louis
enough.
or whatever. And
Yeah, yeah.
so that's what I mean by subsummation. That's a really important concept because the transformation economy subsumes everything prior to it. So it subsumes the experience and the products and services. And that's an important point because we're no longer focused on the products and services. So that knocks out scope of work right there. And I think this is where we could go to talk about nature of work. You can still have tiers in a subscription business model, different levels. Like you
Right.
said, Louis, with your firm, you have, what was it, the Clarity
Yeah.
Hub
So
and the
what
Management
we
Hub.
do, what we've decided to do with ours, because uh, just as a background, I've created a firm called Naylor Accounting Services here in Canada, and what we've decided to do is develop a two-tiered system. All that means is that tier one is for customers that just want records and
Mhm.
just want, they're not interested in anything but, give me my numbers and away I go and I'm happy, and I don't want anything. And then the other level, which we call Management Hub, which is you get access to all of our experience and expertise when you need it, how you need it. Doesn't mean you use all of them, but when you need something, it's there. We then set it up so that we conform with you and we meet with you on a regular basis, so you optimize your access to these points, and it's a one price,
Right.
right?
Yep.
And we do have the cancellation. What we do is we do a 3 month. We need 3 months because of the problem is when you have a start to finish system, you need the handoff period. So you can't, you need to hand off stuff. So it might take a while to disengage, but that's the only reason why we have that cancellation. So it's a 90-day it's for the customer more than for us. Right. At the end of the day, it's to make sure they get the best service when they leave as well.
Hmm.
So yeah, I've tried to do a one-tiered system which they have all of our experience and wisdom built in, but the customers may not want that. So
Right.
that's why I have the two.
Right.
So I hope that helps. That's where I'm coming from.
Yeah, and it's going to be very easy, I think, for you to be able to plus that offering as you move forward in time. You'll be like, say you might add CFO services or FP&A analysis or whatever. You could put that into the Management Hub service, and as you plus that offering, maybe some of the old pluses move back down to the Clarity level, right?
Right.
Um, and people can jump between the levels real easily, seamlessly if they want. They could switch back and forth every month. And that's another great thing about subscription is it's completely flexible within your tiers. But the point is that now you have a lifelong relationship with the customer where you're not focused on the math of the moment. You're focused on providing these serial transformations. And you probably can't guide more than one or two transformations at any given point in time. You might have a personal transformation going on with the customer. You might have a business transformation, helping them accomplish something in their business, getting financing or expanding or building a new factory or rebranding, whatever it might be. Um, you can look at those as transformations and use that language. And then now the whole discussion, we've already made the pricing discussion. They've already signed up. They're already a member. And we like
Yeah.
the term member rather than customer because membership has its privileges, right? Like a country club. A country club isn't line item, giving you line items for every burger you ate and every time you used the swimming pool and played golf. I mean, no, you're a member. You get access to the facilities, and it should be the same thing here. That creates a frictionless environment. It creates, I think, a more pleasant environment for the customer, a better experience. It's simple, and it's it's focused on these transformations, which I think are far more valuable than just providing services and using that language. So I think the subscription model is the logical stepping stone into the transformation economy.
We seem to think alike. We've been thinking alike for many, many years, to be quite honest. Uh, So I'm not going to disagree with you because I agree with you 100%. Um, the, the the profession has had to transform from an archaic model of billing. I don't know, I mean, to fixed fee to value based. I think this last transformation, I mean, there might be another one. Don't get me wrong. AI is coming out. We never know what the next setup is. But for my foreseeable future, I think the subscription model is probably the best model for professional services for the most part. I mean, it. I always say the 80% rule. If the model fits 80% of your practice, that's good, right?
Hmm.
You want I'm on the side of strategic modeling, to be quite honest.
Yep.
That's where I live, and I think you live there too. And I've never asked someone to do 100%, but your model, like in every business, has to have about 80 or 85, 90% of your operations has to be in a strategic business model that fits the goals that you're trying to use. It's never 100%. So I've never told someone to convert 100% of your company. But if you get to 80%, you're doing very well because there's always outliers, right? We know that. There's always outliers. Here's one thing that I want to ask you about because I think the subscription model is great. The problem is, in my opinion, is the professional has to pick a lane,
Hmm.
right? That's what I think is really important
Absolutely.
with subscription modeling because if you look at the old model for accountants, they basically you go to a website from an accounting firm, they do everything,
Everything.
everything under the sun, right? So what we've designed ours, to be quite honest, is we pick a lane based on size of company. So from 0 to 2 million is basically going to be 80% of our business. And if you hit in that range, these are your price points. The reason why we've done that is because the the owner is a specific type of owner at that level. Their infrastructure is a certain way. Their accounting department is a certain way. How they, they're usually a one owner with many hats. We help them a lot, right? Once they get to the next level, and we do have a next level, which is customized, right? But we don't expect to have more than 10 or 15% of our customers there. What do you think about that? Can you talk a little bit about picking a lane? Because subscription model will not be good for you if you are basically everything to anybody. And, uh, you know, because you talked about that with doctors about how they pick their lanes, right? What they don't do is defines you more than what you do.
Right. Yeah, no, it's really important. This goes back to, I believe strategy guides everything. I mean, strategy should be aligned with your positioning. Are you Morton's or are you McDonald's?
Right.
Right? They both sell meat, but they're going after completely different customers. And if a McDonald's customer walked into a Morton's and expected McDonald's, and vice versa, it'd be a disaster. Um,
Right.
and you can't be all things to all people. So you really do have to. Where are we going to play? What can leverage our strengths? What do we know? What are our competencies? And there's nothing wrong with passion or feeling passionate about a particular industry or vertical, whatever. However, you
Sure.
want to talk about niching, horizontal. I was very passionate about bearing the billable hour. That led me to work with any profession, not just accountants, that were charging by the hour. So I got into actuaries and lawyers and IT consultants and CPAs and advertising agencies. But it was a horizontal niche, which is a little bit tougher than a vertical niche when you just say doing dentists that are of a certain size. Um,
Yeah.
but
That
either
makes sense.
way, if you're niched, you're going to have an easier time with subscription. Now, I have seen businesses that, especially tax firms, that will take anybody regardless,
Right.
and they can be very successful with subscription. I think it gives them some benefits, but I hate to see firms that are not focused because you kind of remind me of a veterinarian whose sign outside says, veterinarian and taxidermist. That way they can say to the customer, either way, you get your cat back. Positioning doesn't work that way. Positioning is all about
Yeah.
trade-offs, right?
Right.
What you say no to, is really more important than what you say yes to. Um, but beyond that, the subscription model works beautifully because again, it's a relationship business. And I think we pay lip service to this, Louis. I think accountants say we know we're a relationship business. Everything's personal interaction. People want to do business with people they like, trust, love,
Yeah.
all of that. We hear this every day. We read it on firms' websites. We want to be your trusted advisor or whatever. But
Yes.
but then look how we charge. We charge by the hour, or we charge for every single deliverable. And oh, by the way, if your scope changes, you have to go to the Department of Paperwork and get a change order. The subscription model blows it all up. There is no more scope of work. Stop thinking in scope of work, because it's not about the services, it's about those transformations.
So let's look. I I could speak about that part. I just want one more area that we want to, that I think we should talk about, because we're going into subscription modeling in a little more detail. Here's the thing. Um, and tell me if I'm wrong. When we go into subscription model, we can no longer think of the individual customer. We have to think of the group, or the, why I call it the silo, or the customer base, because if we start trying to apply individual modeling to subscription modeling, we are going to get lost. Does that make sense?
Yes, you're thinking about the portfolio. And
Yes.
but you've already thought about this on the macro level, because you said we're not going to take anybody who's not within $2 million. So you've
Yeah.
already set the parameters of the portfolio. Now, every person that drops into that portfolio who becomes a member or customer, I'm assuming fits that parameter. You've already thought about it. Now, the question is, you don't have to worry about, oh, did we spend more time with this customer this month because maybe they were facing a challenge and we had, spend more time with them. That does, again, our time doesn't matter. It's their time, the time that they spent with us to get them through that tough problem. Did they think that was time well spent? If they did, then we invested in that relationship and the lifelong value of that customer, which is what we're really trying to build as a firm, is lifetime customer value. And therefore, it's really important to think about things from a portfolio level rather than trying to figure out profitability per customer. I pull my hair out when I read consultants that say, oh, you got to know which services are profitable and you have to know which customers are profitable. Yeah, because you don't have a strategy. If you had a strategy, you wouldn't worry about that, because you're only
Right.
taking customers who are the right fit for what you do. And once they're in, then it doesn't matter how much time. Time is immaterial. It's what transformations are you achieving with them. That's what matters. That's what we should be
Ron, the
measuring.
reason why I'm smiling right now is because um, you're absolutely right. But when you talk to a professional who's been at it for 15, 20, 25 years, and looked at the individual customer or client, as they so call them, and budgeting and time inputs, I got to tell you, it's a heavy lift. I've been
It
there
is.
many times. I've I've converted dozens of firms into menu-based personal tax, because that's the easiest
Hmm.
one, which is a form of subscription modeling for that specific season. And the reason why I always do it is because, and once they go into that, they have a 30-40% profitability. They have a 30 or 40% increase in revenue and almost 100% profitability growth,
Hmm.
right? And a slight reduction in size. And their billing and tracking, they no longer track time and everything. And what happens is, when that person who I've transformed tells his colleagues who use the old system, they think he's fibbing.
Yep. Yep. Absolutely.
Right? Or or
Absolutely.
or or the other famous one is, it works for you, but it doesn't work in the real world where we live,
Right.
right? So please emphasize, because you're the, to me, they should take, if not for me but from you, please emphasize how subscription modeling, you have to change your mindset. If you don't, you're going to have a lousy time with subscription modeling. Is that correct?
Yeah, absolutely. The cost accounting, and I'm a prior cost accountant, recovering, repenting cost accountant, I should say,
Yes.
every day. But that's the view of the cost accountant's world. I just read a post on LinkedIn that said, "Oh, you've got to know somebody posted that Apple has one income statement. Apple is a one income statement business. If you ask
Right.
Tim Cook, the CEO of Apple, how much profit does your um, uh, what is it, the App Store make? And he
Okay.
was actually asked this in a court trial. So he was under
Yeah.
oath. And he said,
Right.
I have no idea, because we don't
Right.
track things like that at Apple. We're not a siloed company. We're one company. We have one ecosystem. Everything's in a, we look at things at a portfolio at the company level.
Right.
And
Right.
boy, the cost accountants that posted on this went nuts. That's impossible. They have to know. And then one guy dug into the SEC reporting and said, well, they don't break down things by product line, but they do break things down by geography. Sure, they might break down their revenue by geography. How much do we make in Europe and China and
Sure.
all, but they're not breaking down. The point is, they don't know how much they make on iPhones. They don't know how much they make on the App Store or Apple Podcast, because they don't view it that way. That's the first thing Steve Jobs did when he came in. You'll love this story. When Jobs came back as CEO in I think it was 97, he noticed that the company was losing $1 billion a year. But each division that had its own P&L, they were all profitable. Now,
You're right.
how the hell does that happen, Louis? How
Yeah.
can that be so disconnected from reality? Well, it's because it's how they allocate those costs out,
Yeah.
which is all
Yeah.
arbitrary. So every division was showing a profit in their little P&L, but the company
Yeah.
was losing $1 billion overall. This is why Jeff Bezos at Amazon never looked at margin. He said, I can't pay my electricity bill with margin. His KPI that he was fanatical about was free cash flow per share. That's what he focused on, cash
Right.
flow. That's a different focus than margin. So
Yeah.
model your cash flow. Don't model your P&L.
So I think you hit on two key criteria. I think my focus isn't revenue growth. My focus is revenue growth compared to profit growth.
Yep.
Right. If one is growing and the other one isn't, something's wrong.
Yep.
Right. And usually, uh, the profit growth should be a multiplier of revenue growth. In my book is 3 to 1. If I have a I know it might not sound good, but a 3 to 1 for me, and that's just my internal over the years,
Mm-hmm.
is a healthy return. So if I have a 30% growth in revenue, I should have a 90% growth in profit. If I don't, then I would start analyzing why, right?
Yep.
Because that's, to me, that's a long-term issue. And the other one, which I know a lot of people do, a lot of entrepreneurs and investment type professionals who buy stuff, is the cash flow, right? Because
Mm-hmm.
cash flow positivity is a long-term health component of the company, right? Because cash flow, regardless of profitability, could sink the ship. So those two, I think you're right. If you focus on those two criteria and look at your company as a holistic approach, I think that works. I'm going to be honest with you. I'm a very simplistic guy, so I don't like to do 12 or 15 KPIs. I'm
Yeah,
into
no,
three
it's
or four, and
crazy.
I'm done.
Yeah,
So
this kind of, when you say I'm a simple guy, so am I. I like to think anyway, because simple doesn't mean, not you're ignoring nuance or
yeah.
complexity or anything like that. Simple is actually pure genius, because it cuts to the
Well, thank you
E.
for that.
it,
Thank you very
it
much, Ron. I
the
appreciate that.
E equals MC squared is
Oh,
simple, right?
yeah,
But it's brilliance. When the new CEO of Heinz took over, Heinz ketchup,
yeah.
he asked the old CEO, he said, if you had one piece of advice for me, what would it be? And the old CEO looked at him and he said, never run out of tomatoes.
That's it's it's such a common sense, but it's probably critical, right? It's yeah,
Yep.
I get it. If you're a tire company, what never run out of rubber, I guess, is
Right.
probably
Yep. Yep.
makes perfect sense. Ron, before you go, I want people to know that you and Ed have started something amazing, and I hope it's doing well. Um, is you have uh, a program now. I don't know if it's called transformation, but it allows professionals to get access to you and Ed, whether it's on a group or even if they want to do one-on-one, they have to first become a member. But can you talk to them a little bit? Because then they could go and take what we've talked about and talk directly to you. And Ed Class, Ed Class is Ron's number two guy or number one. I don't know. They're
Or co-equal,
interchangeable. Yeah,
co-equal.
they're
Yeah.
interchangeable, to be quite honest. But they work extremely well together. It's yin and yang, in my opinion. So if you could do that before we go, just talk a little bit about that. I would love everybody to at least leave with that and make sure they can get a hold of you.
Yeah, Ed and I created a company called Threshold, and you can visit it at thresholdnow.com. And like you said, Louis, we're trying to build a community of firms that want to, that see the world like we do, that we're entering
Right.
into this transformation economy. Firms that are using the subscription business model. We wanted to build a community where we could learn from one another, because frankly, this transformation economy, even though it's out there and I see examples of it every single day in a lot of different industries, it's still very embryonic. So we're all learning. I don't have all the answers, but I'm excited about it because it's changing the nature of our discussion and our messaging and our marketing. And I think it's bringing us back to our professional roots. This is what we were called to do as professionals, is to guide transformations. There's no higher calling than making somebody healthier, wealthier, wiser, or help them live with purpose and meaning. And Ed and I wanted to do that. And because there's a proselytizing nature in each of us, we have a foundational membership, which is free forever. So people can join for free.
Yeah.
And we hold monthly calls where we deliver content. We're also introducing Ask Me Anything program. So we'll come on, I think it's every other month, and people can ask us questions. Um,
Fantastic.
and we also have a focus membership, and for that you get specific content that we develop around the transformation economy. We plan to bring in other speakers, and then we have a bespoke level, which is when we work with people specifically or organizations, and it's all about the transformation economy. So this move away from products and services, and we're really excited because just a couple months ago we put out a document called Threshold, a revelation for the transformation economy. And
Fantastic.
people can find this if you want to learn more about the transformation economy and what we stand for. Ed calls this our Jerry Maguire document, if you remember
Oh, is
that
it?
movie,
Yeah, yeah.
where he writes that document and he's walking in with it, and people, all of his colleague buddies are saying, "I give him 2 weeks and he's out of here."
Yeah, yeah. I remember that.
Yeah.
Yeah, yeah.
But we put we put a stake in the ground with this, and people can access this and read it online and even comment on it, um, at thresholdnow.com/revelation. And it is a revelation for the transformation economy. And it deals with things like burnout versus moral injury. We think
Yeah,
burnout's the wrong discussion. We really think what's going on is moral injury. Maybe we could have another show about that. We talk
yeah. I'd
about
love
this
to.
issue of work-life balance, which we think is a complete joke. Work and life are not separate. Life, work is an expression of life. Um, we talk about productizing services. We talk about private equity coming into the firm and what we're
Yeah,
scared about, even though we never mention private equity. We never mention artificial intelligence, but we know it's commoditizing services. And I think if we look at AI as augmented intelligence instead of just artificial intelligence, it's going to help us get away from the predictable rote type stuff that we don't want to do anymore. And it's going to free up time so we can be more human and guide
yeah.
these transformations. And so it kind of puts a stake in the ground and says, "Hey, here's what we think. Come join us if you see the world the same way." And I'll let people read it and make comments, and we'll go from there.
Well, honestly, I really like this, Ron, because it allows all of us to get access to you. I've been a friend of yours for many years, and you're always traveling, you're always going everywhere. So this is a great way for us to pick your brain and Ed's. And I think this is your new passion. Last time we talked, when you wrote Times Up, first you didn't want to write it. I get it, because you weren't into writing it. But after you wrote it, and the fact that it re-energized you, I think this is this is fantastic because I do believe subscription-based modeling with all the changes in our industry, and I'm talking about the accounting bookkeeping industry, we do need a brand new model. The value-based pricing has its lifespan, but I do think the next generation or the next way to go is here. So thank you so much for
Great.
joining me. As always, I love talking to you. We could add another 3 more hours to this thing, I bet. But I think you've had enough, and I think you're ready to go to your next meeting. Anyway, thank you so much for sharing, and
Okay.
I'm looking forward to the next time we get together.
Me too, Louis. Thank you so much.
Well, Ron, thank you for joining us today, and you, our valued viewers, thank you for tuning into this session. I know there's a lot to unpack with regards to our show today, especially the fact that we have a lot of important information. If you want to scale your practice profitably, please take a look and take notes during the session. If you've missed something, please go back, as there's a lot of good information in our session. As always, we always welcome your feedback, so please put them in the comments below. And if you haven't done so already, please subscribe to the channel. So by all means, be healthy, stay hydrated, and always be curious. Bye for now.